What if I told you that your biggest losses are not random, they are engineered? Flip zones are the most deceptive part of market structure, and once you understand how they are being used against you, everything changes. Today you will learn how to detect the flip zones early, how to avoid fake market structure shifts, and how to trade the real flip move. I'm Victor Snow from Trading from the Soul, where ICT is simplified. Subscribe now so you don't miss out on future videos. Keep chasing! The flip zone strategy and our candle range theory. This is what the flip zone looks like. A flip zone is simply a change of character, but a special type of change of character. The mistakes I see traders make is mapping out a change of character as what? A flip zone. Can you tell me which one is the flip here? Comment down below. If you pick this one, you are wrong. This is our change of character, and this is our flip zone. If you're making this mistake, pay attention from this part of this video to the end. A flip is a market turnaround from an uptrend to what? A downtrend, indicating a market structure shift. We have two types of flips, a reversal flip and a continuation flip. This is what our reversal flip looks like, and this is what our continuation flip looks like. I explained this our reversal flip at the first part of this our flip zone video. I'm going to be linking the playlist here. A continuation flip is being divided into a bullish continuation and what? A bearish continuation. This is what a bullish continuation looks like. Can you see when we approached a higher time frame level, first of all made a fake sell, and we finally broke the higher time frame zone. Can you see when market returned back to our flip zone, we made a buy? And can you see how market took us to our take profit level traders? Why I love the flip zone a lot is when price action goes to this higher time frame zone first, people that are not watching this video first of all made a what? Sell first. Remember, their what? Stop loss will be here. And I told you guys that stop losses are equals to what? Liquidity in the markets. And liquidity is equals to what? Money. See how it works. You take your money, you deposit it into the bank, and from your bank, what? You transfer it to what? Your broker. And from your broker, you can access the money whenever you place a buy market order, buy limit order, or a buy stop order. Your orders are here, meaning that what? Your money that you transfer to the bank are actually here. And can you see how we came to what? Take you out, flip them. Means that we cleared out their liquidity. This means that we've transferred their money, their liquidity to us right here. Liquidity is what? It's like food we eat every day. Without it, we won't be able to what? Go about our daily tasks. That means that without liquidity here, our trades won't work. Now, how do you make sure you trade with the smart money? What? By understanding the rules for the bullish continuation flip, which we have 5 rules for it. Number 1, it must be in an uptrend. Number 2, must break market structure into a higher time frame zone. Number 3, must be a reaction. Number 4, must break the higher time frame zone. And number 5 will mark out the last order block as our flip zone. In this example right here, can you see that we were in an uptrend right here, and we were first of all in a downtrend. Can you see what? A break of market structure, a lower high, a lower low. The same with here, break of market structure, lower high, lower low. And can you see we came and broke this last lower high? That means we are in an uptrend. I'll go ahead and check this number 1. Number 2, it must break a market structure into a higher time frame zone. Where is our higher time frame zone here? First of all, what? This bearish order block, and we want market to come into it. And we check number 2. This is what I mean by a reaction, where market move opposites. Can you see? First of all, we were moving up, but now we are moving down. I'll go ahead and check number 3. Number 4 must break that higher time frame zone. Is this a break? Comment down below. No, it is a weak break of this our higher time frame zone. This is what our strong break looks like, and this is what our weak break looks like. In a week break, we went above this range, but we ended up closing below it. While in our strong break here, we went above it and we remained above. Let me know which one you use at the comment section, because if you're using this particular one, you will definitely be losing trade after trade. We finally closed above this higher time frame zone. We'll check this number 4. Number 5, we'll mark out the last order block as our flip zone. Where is our last order block? This is our last order block as our flip zone. We just have to wait for market to return back here and we trade to the upside. Watching, we'll see if this our reaction here came in form of just one candle. Is it still considered as a valid reaction? Yes, the number of candles don't matter. I'm going to be marking out this candle as my flip zone. Let's take some example. This is USD JPY, the 1 hour time frame. We can see the market is coming down, right? A break of market structure, lower high and what our lower low. Can you see that we just broke this range here? We anticipate market to what starts heading up. Can you see we have a break of market structure here? We are now in what an uptrend. I'll mark out a bearish order block here and wait for market to come into it, and I'll wait for a reaction. How many candle reaction is this? Comment down below. And then we broke our higher time frame zone. I'm going to be marking out this last order block here as my flip zone to trade from. Then I'll wait for market to return back here and I buy. Okay, and can you see what a full take profit traders? What can you see right here at our flip zone before market started heading up? What our candle range theory. Don't worry, I'm going to be showing you how to use this in a moment. But before that, let's look at the rules for our bearish continuation. Number 1, it must be in a downtrend. Number 2, must break market structure into a higher time frame zone. Number 3, must be a reaction. Number 4, must break that higher time frame zone. Number 5, will mark out the last order block as our flip zone traders. This is what I mean. This is a bearish continuation flip. Can you see how we were in a downtrend? And can you see how we recently made a break of market structure into this higher time frame zone here? Can you see what our reaction? Can you see how we broke this higher time frame zone here? And can you see what our last order block as our bearish continuation flip traders? If you really want to learn, if this video is helping you improve a little as a trader, give me a thumbs up right now. This is a trade I took 30th June this 2025 on USD JPY. I drop everything at my Telegram group. I'm going to be linking it at this video's description. This is the 1 hour time frame. Can you see what we made a market structure shift right here? We are what in a downtrend traders. It will be wrong for me to just start what selling right here because of we are in a downtrend. I'll mark out this what demand right here and wait for a flip. This is our reaction right here. How many candle reaction is this? Comment down below. I'm simply making you see places your eyes don't yet see. We'll mark out the last reaction here as our bearish continuation flip. So the question here is, should we trade immediately? Comment down below. And that is where our candle range theory comes in place. How we get higher probability flips using CRT. This is what our candle range theory looks like. Now this is where it gets exciting. We need this our CRT to form at this our flip zone before we can sell, making it a high probability flip zone. Someone watching will say, Vitos, no, we don't understand this CRT something. CRT is simply when we have what a 1 hour candle, which everyone in this our channel calls a one stupid candle, and we need this one stupid candle to be forming at that our flip zone. The highest this one stupid candle go to is called our candle range high, and the lowest this our one stupid candle go to is called our candle range low. Now this is where it gets mind blowing. We want our second candle here to sweep our candle range high, tap our flip zone and close down immediately. This right here is what our entry signal to sell. And can you see how third candle moved to our candle range low right here? Because this candle range low is our draw on liquidity. Draw on liquidity is where price is likely heading to next in the market. It is like when you are in the United States and you are heading down towards Nigeria. Nigeria is your draw on liquidity. You lose the most in the market when you try to win too fast, and that is why you have to always wait for this our CRT model. If you really want to learn the smart money concept properly, give this channel a subscribe now. We post videos every week. This is our example right here. We just have to wait for market to trade into here. This first candle that entered here is our one stupid candle, and the high of it, the candle range high, and we wait for what? A sweep right here. We can now trade from here now, and we target a 1:3. Let's see how this trade unfolds, traders. And can you see what? If we take profit, smash, traders. Now this is where it gets exciting. Everything that I've been teaching you since the beginning of this video, like this example here, all has this CRT model in it. So I'll be linking our CRT playlist up here. So our bearish continuation flip is otherwise called a demand to supply flip, and our bullish continuation flip is otherwise called a supply to demand flip. Why? Because we have what? Our higher time frame demand here. When we reacted and flipped it, here becomes our what? Supply. That means a demand to supply flip. For our bullish continuation flip here, this is our supply zone, and when we flipped it, here became our demand. That is a supply to demand flip. This is some trade I sent out to my Telegram group and my private mentorship group here. If you're struggling with trading and you really want to improve, I just launched a free 3-day trading course. Link will be at this video's description. Here is our CRT playlist, and this is our candle range theory playlist. Give this video a subscribe and also a like so that we can continue making awesome videos like this.
They tell me that I'm never gonna